We want to make sure that we are all a bit more frugal by the time we get through this full series. Crystal Howell is here with us because it is Monday and we want you to know how to manage those pennies. Crystal Howell is a chartered professional accountant and a certified internal auditor. Good morning.
Good morning.
Happy Monday.
Happy Monday. So you have the St. Thomas regathering.
Listen, they did not miss a beat. They made sure that I had my little sun visor.
Wow. Did we have anything like that for St. Lucie or St. Peter?
No, and I mentioned that. So I had to, but we had lots of fun in both of those parishes. We had some good times, but they made sure that the visor was left. So they're definitely ready and they want the world to know. Yeah.
So the other parishes have to step up.
They have to get some visors, get some shirts in here early. Yeah. Yes. All right. So with that said, though, we want to continue our look during the month of March at financial statements.
Yes.
Because we are getting closer to tax filing time.
Yes.
And this could probably have a bearing on that as well.
It will definitely have a bearing on that because many companies have to try to make sure they get their financials in order so that they can file their corporate taxes. And then we have the individuals who are going to be filing their taxes in April, which most of you should be doing already. We're going to make sure that as many people as possible can do it for themselves, or at least if the professional does it for you, you understand what is being done and why you end up with the balance that you have. So we will do a little recap for what we've been doing so far. We looked at the income statement, which looks at all the money that you make and all the money that you spend. And that gives you the rough figure that you will have, whether it's net income or a net loss, that you would actually use to calculate your corporation taxes.
Yes.
So then we moved on to our statement of financial position, which used to be called a balance sheet. And we started looking at the assets that you would have. The statement of financial position, just to remind persons, is a look at everything that you own and everything that you owe and everything that you have as capital. So
literally, this is where I stand financially.
Yes.
Right.
So every single asset that you have, every single liability that is at you, and all of the funds that would have helped you to get there, whether it was your own equity or whether you would have borrowed long-term funds to help to finance your business.
Okay. So once we have all these statements in order, you know what your income statement looks like, you know what your statement of financial position looks like, then you go on to the other type of financial statement?
Yes, but we'll just go into a bit more detail with the other side, because we looked at the left side of the statement of financial position last week, and we'll get into a bit more detail for the right-hand side, so that people could get an understanding of what it is that goes in there.
Okay.
So you have at the top of the statement of financial position, on your right side, you have your equity. And whatever your name would be, this is the person that would have invested any kind of funds into you starting up your business.
Okay.
And as each year goes on, the income or loss that you would have made from your income statement will be added or subtracted to this equity. So if you started off your business with, let's say, $5,000 and you made $1,000 in profit, your equity would increase to $6,000.
Nice.
So then you will see that your business is growing and that the funds that you're investing into your business is helping you to see that your business is making money for you. Conversely, if you made a loss, it would subtract, of course, from your equity. So that money that you would have saved over the years and decided to start off your business with, you will see if it is going up or down.
Okay, so you need to let this reflect the truth. You don't want this to lie to you at all.
Agreed. And there are ways where, when you're dealing with financial statements, because there is some judgment involved, where you might play with the numbers, but then it doesn't give you an accurate picture of where you actually stand. So it's best to be, as you said, as accurate as possible, to be as close to the real position as possible.
Okay.
And then underneath that, you'll see some long-term liabilities, because the $5,000 you may have started off with may not have been enough for you to buy everything that you need. As we were talking about over the weeks, we would have mentioned loans, whether it was a short-term loan or mortgage. You may have gotten a mortgage and decided to purchase your own property. Some people decide to rent, but some people may decide, I want to buy my own property. And you will see that long-term liability coming here as well. So you might owe the bank, let's say you paid $300,000 for this property, you will see that long-term liability sitting there as well, so that you would also have an idea of the obligations that you would have.
Yes, and over what period of time
Yes.
you need to be aware.
So some persons would include what we call notes. So you might see a little note there with a number, and then when you go to that note, it explains to you all the things you just said, where how long you would have had this long-term liability for, who you owe, what interest rate, all the details to help you to better understand this number.
Okay, excellent. All right, so shall we go to the next slide then, or have we completed that side?
Have a little bit more left on this one.
On that side. We want to make sure that you have all the details.
Yes.
Go ahead.
So we have the current liabilities now, and these current liabilities are things that you can pay back within a year's time. So you may have borrowed some money from a friend or even from a bank, a financial institution, a credit card loan, anything along those lines, anything that you can pay back within a year's time would go here.
Current liabilities.
Yes, and accounts payable. So you, in your business, you may have vendors that you owe money to because you did not have the cash at the time to give them. All of those vendors and persons that you owe will go here. And again, you can have some notes that will give you details as to the persons that you owe and the terms or conditions under which you have to pay them back.
Okay.
So you may have here some details, or you may put those details inside of the notes. And this will help you to be able to have a better idea of all of the liabilities that you have to keep track of.
So at the bottom of this, the tally is there.
Yes.
And you need to have a firm grip on that.
Yes.
Pardon me, that tally.
What we tell persons all the time, your left side has to equal your right side. The math in accounts is actually very, very simple. Assets have to equal to all of the money you owe and all the money you would have invested into the business. So if those two numbers do not agree, then there's something there that is off, and you just have to go back through and make sure that you look through and see if you didn't put a mistake or if you didn't pull over something incorrectly. But that's what your professionals are there for as well. But it's just for you to be able to understand. I want persons that when they see these numbers, they have an idea of what it means for their business, so that they're not looking at these numbers and feeling lost or not understanding the story of what their business is telling them.
Okay, excellent. All right, let's get started then. We've completed the right side, and remember the left and the right, they have to add up. They need to correspond, or you have another problem.
Yes.
So you definitely would then need the certified internal auditor to clear that up for you. So the next thing we want to focus on, and we'll probably have to start that today.
Yes. I'm not sure if you're going to get to finish, but the last statement that most persons, if you're in a small business, you want to look at is called the statement of cash flow.
Okay.
And we would have mentioned this many, many months ago from a personal point of view, where we're looking at all of the money that you're supposed to have and what you actually have in your pockets or in your bank account. But from a business perspective, this is trying to take a look at the cash that you have, yes, but there are a lot of things that you have on your financial statements that are not necessarily cash-based. So I'm not sure if you may remember when we were discussing the income statement, we spoke about something called depreciation, where you have your assets, and over time, your assets are going to wear down. And we have an
talking about the couch, yes.
And we have an expense that we take because we will say, let's say this couch has a lifespan of 10 years. Every year, we divide the value of the couch by 10. And every year we take away a little bit of that value. But that wasn't actually cash that you lost. That was just an expense that you were using to keep track of the value of the couch and to show you, you know, when this couch gets close to zero, we might need to.
Yes.
But it wasn't actually cash that came out of your hands. So the point of the statement of the cash flow is to take things like that, where you would have taken it away from your income statement, and to show that this wasn't actually cash that you lost, and this is the reason the cash that you have in your bank account is different to the income that you said that you made.
Okay. this is a good point for us to pause for today, well, to stop for today.
Yes.
But we will continue to discuss the statement of cash flow, because if there's one thing everybody wants, it's for the cash to really be flowing nicely. Crystal Howell, we appreciate your conversations to help us be that much more frugal, and certainly understanding how to manage those pennies so we can make it generate into more pennies as well. Thank you so much, and wish you a great Monday.
Thank you.